Hello there, this is FairBinaryOptions.com, and we are looking at the US dollar Canadian dollar pair here in this Sunday on the 26th of April, basically just shy before the end of the month, as this US dollar Canadian dollar is nothing but bullish in this area. I would say that we may even have here a pennant that the market formed prior to going over the weekend, but the arguments for the long side are of course on the bigger picture. On the bigger picture we had a contracting triangle that broke to the upside, this contracting triangle here, from here to here and from here to here, and this contracting triangle is being called, or it is a so-called limiting contracting triangle. What does it mean? It means that price on this triangle is limited both in, or price action to follow is limited both in price and in time. The triangle is confirmed and actually went all the way to making a new high. In my book, this is an impulsive move that ended a third wave in here prior to the triangle, a fourth wave with the triangle here, and the fifth wave to the upside with the new highs that have been made in there. However, after that moment of time, and the fifth wave basically was done when Miss Yellen was speaking at the press conference after the FOMC latest decision, and the move basically was corrective and stopped into this area here. This area here is crucial as it held for 1, 2, 3, 4, 5, 6 times until market decisively broke lower. Well, after the break lower, we gotta look at what this market made. From my point of view, of the same degree as in black, we have a wave A that is about to end in here. Only a wave A. Now this wave A, it is formed out of a triple combination. The triple combination goes in the following scenario. We have waves A, B, C, and this is being called wave A, or a flat for wave A of a lower degree than the one in black. It is being called a flat with a B failure if the B wave ends here, and the C wave is a terminal impulsive move. Therefore, it is completely 100% retraced. Well, retracement came, everything in place, and then a contracting triangle. A, B, C, D, E. The contracting triangle here is an X wave or an intervening X wave, and the intervening X wave makes the connection between the first correction, namely this flat, and the next correction to come. A, B, C. This is being called a zigzag. This zigzag is not any kind of zigzag, it is a truncated zigzag, and usually truncated zigzags are being retraced around 80%. Now, what do we have? We have two corrective waves, an X wave, another corrective wave. I would say an X wave that goes all the way to here, or maybe a small one in here. And now we should look into what? Now we should look into a contracting triangle that goes with the following scenario. A, B, C, D, E, and then a retracement, something like this. Why a retracement something like this? Because triple combinations are rarely 100% completely retraced, but because they are corrective waves, they gotta be retraced minimum 61.8, as the B wave should be a corrective wave as well. So I would say that this market is going around 1.25. It doesn't really matter when you trade binary options if that level is going to be reached or not, because it all matters that 1 pip the market to be above your striking price and your trade is a winner. So what I would like to do here is to buy call options. So I'm looking for call options with end of week expiration date. An end of week expiration date means for Friday, next Friday, basically into the 1st of May. Thank you very much for being here. This is FairBinaryOptions.com. Make sure you check our website, our analysis, and of course the Binary Options Academy. Bye bye.